Hey everyone, it's Rob B here with Rob D, and will this be the last podcast we ever deliver? Because are we just doing away with house price growth? And if house price growth is slowing down or will never boom again, what's the point? Well, the point is you can make incredible wealth in this market. We're going to explain to you why the market is behaving the way it is right now, but also, more importantly, teach you how you can take full advantage of it.
Welcome to the Property Podcast. Thank you for joining us. In case you don't know, we run a business that buys more than £100 million worth of property every year for our clients. You can find out about that at propertyhub.net/invest. But should we all stop investing? Is it over? Have we missed the boat when it comes to property? That's actually a question we receive quite a lot. And coming up in just a minute, we'll explain that, well, you have missed a pretty wild ride, but what's ahead might be even better.
It's time for our news story of the week, and the big news this week comes from the government because there's been a massive spending review and there's huge sums of money involved here for defence, NHS, the list goes on. But importantly for this podcast, there is a significant sum of money allocated to housing. Rob, 39 billion in fact, has been allocated to housing over the next 10 years. What are we going to do with all that cash?
Well, it is, Rob, the largest social and affordable housing investment in 50 years, apparently. And what this means is an extra £39 billion has been allocated over the next 10 years to create new social housing, homes for affordable rent, shared ownership, and all that kind of thing. And this is apparently all new money. You know how the government likes to re-announce things that they've announced before to make the numbers sound bigger? This apparently is all new funding. As is typical, details are pretty scant. I think it's going to be more detail to come in the autumn. For me, I'm very curious to see about how this breaks down between social housing and affordable housing, because I think we all know that affordable housing is not actually that affordable, and social housing is in massively short supply and very much needed and has been kind of ignored. So I think where this money goes is important. But housing was one of the big winners from the spending review, getting a load more cash, showing the government is treating it as a priority, which of course they are, because it's something that voters very much care about and that very obviously isn't going well right now. If there's one belief that people have about house prices in the UK, it's that they always go up. Pretty much the whole way people think about money is predicated on the fact that house prices go up. You have to get on the ladder. You have to get on and cling on before they get out of control. But a really interesting article in the Financial Times recently argued that that could be a thing of the past. That could already be over. We're going to talk through that argument. We're going to talk about whether it's true, but then we're going to show why even if it is true, as an investor, it doesn't matter at all.
So let's address the elephant in the room. And the elephant in the room is that house prices go up, and they have gone up for decades. In fact, since the records began, property prices have a history of going up, Rob. So with that being true, because it is history, it did happen, do we stop the podcast now and go, and that will carry on?
Well, we did have a very long trend of house prices going up a lot, going up quickly. So in the 1970s, house prices rose by 300% over that decade. In the 80s, they put on another 200%. In the early 2000s, in the run-up to the 2007-2008 collapse, prices doubled again in less than a decade. So you can see why property became this national obsession that I talked about. And there's this belief that property prices just like uniquely go up faster than anything else. But that rate of growth has come way down. So growth had been slower since 2008 anyway. Even before we got into COVID and all the weirdness around that, we were in a slower growth period than we'd seen for a long time. But then since 2020, or more accurately, since that little COVID mini boom came to an end, growth has pretty much completely stalled. If you look at the house price indices, prices are going up by, well, on average, a couple of percent per year. But in inflation-adjusted terms, that's nothing. It's less than nothing. There is no growth. And I said, Rob, that we'd had this very long trend of house prices going up very quickly. But I think, like I said, this slower growth period has been going on since 2008 now. I would say that that is now in trend, not blip territory, because we are now seeing the lowest trend of sustained growth than we have for 50 years or more. So you got to ask, what's driving this? Why is it slowing down now?
We are setting records. The records are that property prices still have not doubled since the '08 crash. We are approaching 20 years. Okay, I'm rounding up, but we are getting there, and we still haven't had property prices double. Every minute that passes is a new record. So it begs the question, what has caused this? Well, a big part of it is affordability, because interest rates were cut, and they were cut heavily down to sub 1% in 2021. But as we all know now, as we apply for mortgages or our remortgages, that interest rates went up to over 5% in 2023. Now, we know that number has started to come down, but it's been very slow and it's a long way from where we're at. And although we've had significant population growth since 2008, in fact, forecasts suggest it's going to grow by another 5 million by 2032, it's affordability. So the rental markets have accelerated quite a bit recently, but house prices haven't. So it's not always supply and demand. It nearly is exclusively supply and demand what impacts the prices there. But with property prices, it is a factor, but it's not the only thing. And it's these higher interest rates and affordability certainly has hampered growth. And government intervention as well. They got rid of Help to Buy, which helped people get onto the property ladder, but also a shift in attitudes. It always seemed to be that whatever government was in charge, particularly if it was a Tory government, that they wanted to see house prices push upwards because people felt good about their own wealth. They felt like they were getting wealthier homeowners, and those homeowners tended to vote Tory. But there was a shift in attitudes where people started to feel, no, it went too far. And 08, there is still a mild hangover from 08 where people are still cautious and resentful about what happened. And the government has been pretty keen to make sure the market isn't pumped up, and they're keen to show that it is becoming more affordable. So their actions, the things that they do, are no longer trying to stimulate the property market.
Now, the FT article does make the point that things could push on again from here. You could have one more sudden growth spurt because the market now, because you've had about 15% or so real terms fall in prices, it means that there is now more headroom for the market to move up. We've talked recently about mortgage lenders relaxing their stress tests. So that could give people more buying power. That's going to feed into more demand and higher prices. You could have more government intervention. They might decide that the feel-good boost of people seeing their house prices go up is too good to go without. So you could see a return of Help to Buy and other policies like that. And this is probably the craziest one of them all. You could see actual economic growth, productivity growth, wage growth, and other factors that get the economy actually moving. And therefore, you'd expect house prices to benefit. But what I think the article is ultimately saying, Rob, and what I would agree with, is even if that happens, even if we do get another little bump, we're probably unlikely to see more long-term booms like we have done in the past. Because when you go back at some of the things that have happened, and we've had those crazy growth rates that we've had in the past. In the 70s, it was all the inflation. Through the 80s and 90s, probably factors like deregulation. And there'll be more besides. But we've had those now. And we were at a point where property was far more affordable. Now, property is far less affordable. So it's just harder to get extreme growth from here anyway. And you also need to have that impetus. You need to have the catalyst for that to happen. And it's hard to see long term where that's going to come from.
Economists love saying all things being equal. I agree, Rob, if all things remain equal, that house price growth in an aggressive way is unlikely to happen. But the problem we have here is humans are involved and humans do weird things. There are markets around the world that are booming right now. So it's not a global situation. It's a regional situation. Certain places around the world are experiencing what the UK is experiencing. But if you look at Dubai, property prices have been going bonkers there for the last 10 years. Unsustainably so. And at some point it will crash. Every boom is followed by a bust. And that will happen. I'm not going to put a date on it for those listening in Dubai, but at some point it just will. But that could happen again in the UK, in the US, if interest rates are cut more aggressively, if quantitative easing is restarted for some reason. None of these things are on the cards right now, but it wouldn't take much for the rules to be reset again and it to trigger a boom market. It's not like it can't happen. It's just based on what's happening today. It's unlikely to happen. But it's not a disaster. You may be listening to this and going, oh, nice one, Rob and Rob. Why didn't it get in years ago when you started? But you have to remember, the majority of our portfolios have been built post 08. So we've not seen any big growth since we started. We've not seen any big growth since we started the podcast. And I think what we're trying to get across is don't expect any of that big growth in the short term unless something meaningfully changes. But yet we're still ridiculously bullish and excited about property because you don't need that. Low growth still delivers incredible returns. Incredible if you buy with a mortgage or you use leverage. Our cash buyers out there, listen up. I know you like buying cash. And I know it makes you feel safe and secure, but even a bit of leverage could really transform the returns that you get from property. But Rob, do you want to do your Carol Vorderman impression and give us the maths on this?
Always keen to do that. So let's assume that property just keeps on growing at an average of 3% per year. And 3%, historically, needs to be said, is extremely low. In real terms, it's nothing. You're going to end up having inflation averaging around 3%. So let's say property just grows at 3%. And to keep this example simple, we'll forget stamp duty and all your costs, but we'll also assume that you're not maxing out your loan to value. So you're only using 66% loan to value. You're borrowing 2/3 of your purchase price. Well, if you do that, and property goes up by 3% in a year, then because you've only put in 1/3 of the money, that is a 9% return on your equity. And then you're going to make some rental profit. So let's say you make a 5% ROI on the rent after all your costs, which is fine. Just about beats the bank, but it's not spectacular. Well, add those two together, and that's a 14% annual return. That's 14% return on your equity in a single year, with property just growing at 3%. So if that's what it looks like in a year, then compound it out over 20 years. You end up in an incredible position. And remember, your rent's going to go up over time as well. And this is with no kind of boom at all. If I had to pick, Rob, I would much rather have this than the spectacular booms and then the scary crashes.
I agree, Rob. These are ideal conditions to operate in. You can get yourself a deal. You can plan out your returns, what's expected. You don't need to worry about crazy markets up or down. But we understand human nature, and many of us would want the boom part, because it's exciting and there's some rapid wealth creation during those periods. And especially if you are in now before it kicks off, crazy wealth can be made if you've built a portfolio of a decent size. But you know where it ends up eventually. And then you have to possibly come out the market for a bit while it cools down or even crashes. I promise you, you think you want it, and this is nowhere near as exciting or sexy what we're talking about, but it is better for you financially, or certainly a lot easier to operate in. But there is reason to be excited, because averages are average. News for not many, but the point I'm making here is we've picked a 3% average there, which is incredibly low. But that will be some areas performing higher than the average and some areas performing lower. And for years on the podcast now, we've helped you identify the areas that are going to perform more strongly. And while we've made lots of predictions over the years that have been wrong, what we've got right more often than not is the places to invest and where the best growth will be seen. And if we're not right, we're very close to being right. And it's the areas like the Northwest at the moment, the Northeast potentially, Yorkshire, Midlands, that are far better for growth prospects than London and the Southeast. Now, London and Southeast, because it's been hit for so long, eventually will become attractive as well. And we will let you know when that happens, when we start to make investments there or look to make investments there ourselves. But for now, there is clear areas where the strongest investments can be made, and there are clear areas like Scotland, Southwest, Southeast, parts of rural Wales, where you should avoid. And if we accept the average is 3%, but because you've invested wisely, you'll see an average growth of 4 or 5, those numbers that we've talked about become spectacular just by beating the average.
That's right. So is the rocket ship of property price growth over? I'd say probably. You might disagree, but I would say it probably is. But that doesn't mean that property price growth is over full stop. Prices are going to keep going up, at least slowly, for obvious reasons. If you apply a bit of leverage to that, then you are winning. And there are going to be areas of the country that do have far more exciting growth. So if you pick those out and apply some leverage, then you are really winning. And if you're able to get double-digit annual return on your equity, and we showed you earlier how you could do that with very conservative assumptions. If you can do that in a market that's easy to transact in, if you can do that with a downside risk that's very easily controllable, and if it could all just happen calmly in the background while you get on with your life, then for me, that continues to make property a phenomenal investment.
It's time for Hub Extra now, the part of the show where we want to give you a little bit more. And remember, you can get even more from Property Pulse, our incredible email. So check that out, propertyhub.net/pulse. That email is written by Rob's fair hand and will be delivered gracefully into your inbox each and every Friday. It's a must read. It's free. There's no reason why you shouldn't be signed up. So go to propertyhub.net/pulse. But what we have for you this week is podcasts. Trying to get rid of you. Not really. But we love to share. We love to share other pods that we listen to because we are podcast addicts as well. We're all in. And I'm going to give you a recommendation. I have previously recommended many, many years ago. I think it's probably 7-8 years since I've mentioned this podcast. So for very long time listeners, I do apologise. But I want to either introduce you or remind you about the podcast called Hardcore History. Hardcore History is by Dan Carlin, and it is hardcore. These podcasts are very long, hours long. Each episode goes on for hours at a time. But the level of research, level of detail that is put into these podcasts is phenomenal. I don't have an attention span that lends itself to listening to a podcast that's 4, 5, 6 hours long. But because Dan does such an incredible job with these podcasts, I really encourage you to listen to them if you have any interest in history. I didn't think I had much interest in Alexander the Great, but his recent podcasts on Alexander have been incredible. I've learned so much, and the way he tells the story is just compelling. I will give you a word of warning. It's one of those podcasts that you've got to give a few minutes to. Give it half an hour. Don't listen for 2 minutes and think that you're going to be in. Hardcore History is an older podcast. It's been around for a long time, and they don't play that game of trying to hook you in early. They know that if you listen for a while, you'll be in. But the first 5, 10, 15 minutes of any episode can be a little slow to get started, but I promise you, stick with it and you will be very happy. And if those podcasts don't sound long enough, I'm going to give you an audiobook, my favourite audiobook on history, which is a mere 57 hours long, and it's called The Rise and Fall of the Third Reich. Again, I've mentioned this audiobook many, many years ago, but as we're on a bit of a history theme, I thought we should reshare it. It's the best audiobook I've ever listened to in the history genre. It's based on the Second World War, as you can probably tell from the title. And when it finished, I was gutted. It was like a big part of my life for a long time. It's absolutely brilliant. I felt I knew quite a bit about the Second World War. I didn't know anything. This book really taught me a lot and delivered again in a really compelling way. But finally, though, a bit like this segment I'm covering now, if those podcasts go on far too long, then Dan, our producer, recommends The Rest is History, a podcast which delivers really entertaining history stories in a much shorter time frame. So if you just want to dip your toe in, maybe check out that podcast. But if you want to go a bit more hardcore, check out the audiobook or Hardcore History. Enjoy.
My goodness. But do make sure you carve out 25 minutes or so for the property podcast. Come on, we try to pack a lot into a short time. So do come back next Thursday. In the meantime, there is, of course, that Property Pulse email tomorrow and Ask Rob and Rob on Tuesday. So plenty more bite-sized property education coming your way. We'll see you for that very soon. Bye-bye.
Bye-bye.